So we're growing at just under 3%. So huge percentage population. There's currently 2 million homes in New Zealand, give or take. And what's really interesting is as a country gets more and more wealthy, you see average people per dwelling decreasing, right? So at the peak of the market, the average people per dwelling in New Zealand was 2.6, and it was just heading downwards.
Yeah.
So what's happened is the supply versus demand of housing is out of balance.
Yeah.
So let's discuss supply. Now, one of the data around this is absolutely awful because people talk about building consents issue. Now, as you know, the difference between getting a piece of paper from council
and
versus building a house
Yeah.
is so out of whack. So essentially the stats I see around delivery, and this is code of compliances issued per annum, ranges from about 25,000 to 35,000 dwellings per year.
Welcome to Checks and Balances, brought to you by Partners Life. I'm Michael Vincent. This is James Blair. And today we've got Matthew Horncastle, founder and CEO of Williams Corporation, here to give his property predictions for 2025.
We're back in your life. Matt.
Hello, gentlemen.
I think it was the start of the year.
Yeah.
When we last spoke to you. So today we're talking about property predictions for 2025. But before we do that, how's 2024 been for you?
2024 has been interesting. It's been easier than 2023. We're definitely seeing more confidence. We're seeing more activity. It doesn't reflect what I believe to be a business as usual property market, but it is a better property market than what we've come through. Yeah. So we're off the bottom, lower than the median, significantly lower than the top.
Yeah.
But we're in a business that in an environment that you can set your watch to.
Yeah.
Like you can kind of say, I'm going to get, if I do this, I get that. If I do this, I get that. Where when we came out the back of 2021 into 2022 and 2023, it was very difficult to understand what would transact at what values and what time frame.
Yeah. Are you seeing that play out different in different regions at all, or is it pretty blanket across the country?
Christchurch is strong, but I think it's, so Williams Corporation operates in Christchurch, Wellington, Auckland, Tauranga. Christchurch is very strong, which is partially the market, but partially because Williams Corporation's very strong in Christchurch.
Yeah.
Auckland is interesting. You can still transact when you put the right product at the right in the right market in the right way at the right price. Wellington is strange because you've got got so much uncertainty with the government sector, with the redundancies, et cetera, et cetera. So Wellington is more uncertain than Auckland. And then Tauranga is quite hard.
Yeah.
It's definitely been hit quite hard by this event.
Yeah.
Wellington, you still pick up business as usual in Wellington. So you still pick up the person that needs to buy their first house, the person that just had a divorce, the person that just got home and they need to live in Wellington for XYZ reason. So you get business as usual, but you don't get anything outside of business as usual. No one just upgrades their house cause no one,
It's too uncertain. And what do you think the reason for Tauranga not kind of big? Because I guess I almost wonder if it's that flood of Aucklanders moving down there, and then perhaps, I suppose people haven't flooded out, but they just haven't had that continuing population boom.
Yeah, well, I think people were paying Auckland prices for a market that didn't have Auckland jobs, Auckland industry, Auckland capital.
Yeah.
So once the tide came out, it was very noticeable that it was transacting at a rate that people didn't want to transact at that same rate once the tide came out.
Yeah,
it was more, for me, it was more noticeable. I assume there's the me of Tauranga where this is home and they have a higher transaction volume than me. Think of, say, Classic Builders, right? Yeah. That's their stomping ground. I'm sure they'll have a base transaction volume in the same manner that I have my base transaction volume in Canterbury.
Down in Christchurch,
right. And probably hard to do in hindsight, but was 2024 what you thought it would be? I know you're quite a bullish guy. Were you thinking that the market would come back a little bit faster?
Yeah, I did. I did think that we would be at a higher transaction volume than we are now. But as you mentioned, I'm such an optimist, and I always believe that I can push through and achieve very high results. So like Williams Corporation, for a rolling 12 months, we've sold about 240 houses. We've settled about 260 houses. So we're doing just under 1% of New Zealand's housing supply. And we do $13-14 million a month, and I sulk the whole time that it should be 20 or 30 million. So like, look, it's and also sometimes people don't quite understand. Like, I'll be grumpy about something. They're like, oh, it's not going good. It's like, it's a great business that does really well. I just have unreasonably high expectations.
The market's here and we're here. I'm here.
Yeah, exactly. And
this is the gap that I'm trying to close.
I want the world to be up here.
Yeah,
right?
but then mentally, it's because we do these sort of things as well. Mentally, it's quite dangerous then to be like, well, in the scheme of things, we're doing quite good, because then you're not seeing yourself to the standard
100%.
that you want to. Yeah. Well, I mean, in terms of being the optimist bit, one of my favorite sayings is that pessimists will be right a lot of the time, but optimists will be the ones that are rich.
Yeah, completely agree. And you need goals that require you to be more than the person that you are being. You can't, like what I've found, and it sounds counterintuitive, and investors don't really like discussion of this nature. I'm talking about capital coming into a company, but you have to set unreasonable goals that require you to be significantly more than the person you are being, and take an unreasonable amount of activity to achieve those goals. So what we do at Williams Corporation, we have a nuclear cash flow. So it's like we assume that we're only going to sell half of our average sales, and we manage our cash on that basis. Yeah. But then when I'm talking to our people, I'm talking an unreasonably optimistic, this is where I want to be. And then when I talk to the marketplace, I communicate probably where we are plus 25%. As a reasonable step, but internally we're discussing where we are double.
I'm guessing like the way you talk to the people here, like the people at this level, focus on the cash flow at this level. I'm guessing that's a lesson from the last few years. We were very strong in our cash because we managed 50% of all of our capital in our instrument. But that doesn't mean that going from having $1 billion work in progress during the largest collapse in asset values New Zealand has ever seen wasn't a very difficult time. Like, we had our difficulties and our stress and our pain points. I think we managed it better than most businesses, and I think we managed it extremely well, but it was still a difficult time. It wasn't. And my blessing and my curse was I started the business in 2011. So I had 10 years of just this beautiful one-way property run. And I was guilty of thinking that I was God's gift to capitalism, and everything I did was because I'm so clever. Not that I have a base competency and I'm good, but I also had a huge tailwind of the right market. The right product in the right market at the right time, delivered from the right core base of people. Okay, so that was 2024. Title of this episode is What's Going to Happen in 2025? What do we think?
Well, this is my synopsis. So you have New Zealand median house price, which is sitting at about 800,000. New Zealand average house price, which is sitting at about 900,000. Median house price in the last 12 months has dropped by about 2%. Average house price in the last 12 months has increased by about 2%. Now, we have fundamental supply versus demand. So we have currently New Zealand's population is growing at 3%, and that's made up of a natural births over deaths of 20,000 people, a net positive immigration of 130,000 people, giving that 150,000 increase to our population in a rolling 12 months. Now, New Zealand's population's only 6 million. And so we're growing at just under 3%. So huge percentage population. There's currently 2 million homes in New Zealand, give or take. And what's really interesting is as a country gets more and more wealthy, you see average people per dwelling decreasing. Right. So at the peak of the market, the average people per dwelling in New Zealand was 2.6, and it was just heading downwards. Now, the data isn't as good as we would like because it comes via census. So we don't see this data live real time. So a lot of what I'm about to discuss is my gut feel, but my gut feel, I believe, is very, very close to being right. So what's happened is the supply versus demand of housing, and I need to talk about supply in a minute, is out of balance.
Yeah.
So let's discuss supply. Now, one of the data around this is absolutely awful because people talk about building consents issued. Now, as you know, the difference between getting a piece of paper from council
and
versus building
house.
a house is so out of whack. So essentially the stats I see around delivery, and this is Code of Compliances issued per annum, ranges from about 25,000 to 35,000 dwellings per year. That appears to be dangerously close to the bottom end and the top end of what the industry does. When you see building consents, you see anywhere from sort of 35 to 50,000, depending on what reports you read.
Yeah.
So it's this huge imbalance. So what people do is they look at the population growth, they divide it by 2.6, they look at building consents issued, and the numbers are pretty close.
Yeah.
So based on population growth for a rolling 12 months, we need 55,000 dwellings to keep our current standard of living. You look at building consents issued and it might be 50,000, and people say it's pretty close.
Not too bad. Yeah.
But it's not.
Yeah.
So there's an imbalance between supply and demand. And then you say, well, why has this 2-3 year and I believe the imbalance to be, people always used to say we're short 10,000 houses per year. At current immigration, I think it's close to 20,000. Right? I think this is probably the worst deficit we've had like now. But why has pricing not reacted to the deficit? And I believe it's because people per dwelling is massively changing. Yeah. So you think of the average household. The adult kid and his partner come home, or they get a boarder, or you Airbnb a room in the house. So, but we don't have the data to show this, but I'm just so sure I'm right.
Well, you can anecdotally know, like kids used to move out a lot younger, and it's gone back where now it's like, I've got to save up. There's no houses, so they just stay and stay and stay and stay. Yeah. Yeah.
So I think we've seen this mass hockey stick within the people per dwelling, which has jumped up, and that's disguised the deficit within the housing market. So the boarder, the kids coming home, moving the parents in, the brother or sister has a hard time, you move them in with you, you Airbnb a room, etc. Right? So, and even me, right? Like I've gone from essentially 2 houses that I lived in, so I was 0.5 of a person per dwelling to 1. Yeah. So like now I'm 1 person per dwelling. Yeah. So I've moved that statistic as well. So there's an imbalance, and the second people find job security, affordable debt, etc., people want to go back to that baseline. It appears culturally in the Western society. So the most common makeup of any household in New Zealand is one couple, right? And if you don't have a partner, the most desirable thing for most people is to live alone. So that the population, and we can argue about if that is or isn't right for society as a side issue, but that appears to be what people desire when you look at macro data.
Well, you also think about the aging population, and then that makes more and more sense.
Yeah, correct. And so you have this supply and demand, which are out of whack, and you have houses which aren't being built that need to be built, and then you have the thing stopping that is really cost of capital, job security, economic security. And the second we get the feeling that there's job security, we get the feeling that there's economic security, and we get the feeling that debt is at a rate that we're comfortable committing to debt, I think it's going to become really apparent that deficit. Yeah. So the New Zealand median house prices increased in value on average. There's 2 numbers. Some people say 6.8%, some people say 7.8%. Let's just say 7 because it's a nice round number. For the last 7 years, because some people talk in average, some people talk in median, there's nuance in what data set you believe is the most relevant data set. The New Zealand median house prices increased in value on average 7% for the last 42 years. Now, we've come through a period where we were growing pretty much at median for a long period of time. We had the COVID crisis, then it started growing at double median. So we had this 2 years at 15%. We then had the Reserve Bank create this artificial recession where they wanted to collapse asset values, collapse business confidence to cool inflation. They lift interest rates, it collapses 15%. And then we have this 2 year stagnation period where it was just multiple dead cat bounces. I can't think of another term, where it jumps, drops, jumps, drops, jumps, drops. But I think it's very reasonable for us to assume that we're going to head back into a business as usual house price inflation market. So I'm going to call it 7% on the nose. And let's break down that 7%. Let's say inflation is going to run at 2.2 to 3%, 2.5%, right? Let's say 3. Inflation is going to run at 3%. It's reasonable to expect that housing will at least keep up with inflation. And then where does the other 4% come from? I believe that comes from the fact that we still are very, very restricted by government. We still have councils being pretty poorly behaved. Like, you should see the letters we get about changes to development contribution fees and all of this cost that come through and restrictions. And every time the government arrives, now I'm a fan of the current government. I don't want to be seen to be knocking them. I think they're doing a lot right. But every time the government says, we're from the government and we're here to help, they come in and they try to change the legislation with all the best intentions. They make it slower, harder, more
negative
expensive.
Externalities.
Every time. Every time. The most terrifying thing you'll ever hear is, hi, we're from the government and we're here to help. Because it's
almost worse than going, we're here to put the handbrake on,
So they are trying to help. I have not seen them helping, and councils definitely aren't helping.
So James, before we continue, I have got a special announcement.
Have you started sticking to your budget?
Absolutely not.
You finally made it as an after hours DJ.
I wish. Mate, the thing is, we have got a brand new podcast partner, Partners Life.
You mean the award-winning insurance provider with over 300,000 Kiwis insured?
Yep, they're also a New Zealand operated company, and they are passionate about increasing financial literacy amongst Kiwis.
Sounds like a great match. Where can I learn more about them?
Check out their website in our show notes below.
Really thought DJ Magic Mike was going to be a global sensation for a second.
Do you think the change in, I think they announced something the other day where in terms of signing off for code of compliance is going to be able to, builders will be able to sign off their own work. Do you think that'll make a difference at all?
Again, in theory, yes. In theory, that's good policy.
When I see it, I believe it? Or
In practice, I've heard governments make these statements for 14 years now, and I've very rarely seen tangible outcome. I'm politely and positively cautious. Just because of my track record observing government behavior, they've never given the outcomes that they've tried to achieve. But we could see that. You know what I mean?
Why if we do?
We could. But it's reasonable. It's reasonable to look at the past and assume the future is going to be generally pursuant with the past, because we've got the same players in the same marketplace with the same constraints. And so I would be very, very surprised. Put it this way, it's almost guaranteed that we're going to have 2 to 3% inflation. And it's almost guaranteed that housing will at least match inflation. And then you have to look at the macroeconomic pressure. See, part of me wants to be bullish and say we're going to see 10.
I'm bullish. I'm picking 10. I'm picking 10 because we're starting to see and again, there's been a lot of dead cat bounce over the last couple of years, but we are starting to see that what people are buying for, it's going above value again. And it's going, I know it's one person, but I had a couple last week. The house was 1.6, the registered valuation 1.65, went for 1.9. And I know that's just one house, one person, but on average, we are starting to see that. And Kiwis have been sitting on their hands for 2 bloody years. And I think a lot of people are going to die back in the market. I don't think we'll see 10%. I think we'll see 10% and then it'll even off a bit.
And it could be 10.6 or something generally pursuant with that. The one thing is, when you're talking nationwide data, it was very, very reasonable to get 10% in Auckland.
Right?
But do we get 4% in Gore.
Or Wellington, right?
Or
who's probably up for
3% in
a round of cuts again at the start of next year. Yeah.
And that's what I do want. There's a few things I wonder about that makes me think that 7% numbers may be a bit more realistic. The first one is the migration data. Obviously, you talk to bloody everybody, including the old property developer, moving overseas. And then the people that are coming, there's less people coming, the quality of those people coming. And then the other bit is, and I'm sure you're very tapped in, just still the redundancies that are happening around New Zealand, the rumors that there's going to be more in Wellington, big firms still making changes, just makes you go, have we still got, I mean, this, we think about the start of this year, right? You go, the average recession lasts 18 months. We go, surely this year things will get up. And I just go, based off some of these things, even with how much the OCR has cut, even though I feel like I'm really interested to see in February what happens in terms of housing stock. Because I feel there's all these pent up people that want to move, boomers with businesses. Like there's all of these
bright lines come back.
Yeah, there's all of these components. And I go, is it still just going to be a little bit slower and longer than we think?
James,
and that's
You're wrong, mate. You're wrong.
And that's a reasonable discussion to have. Like it is a reasonable discussion. You look at Wellington for an example, and I hope that I'm right in this data, right? I believe this to be true, but I haven't read the reports as thoroughly as I'd like, and I'm going to have someone in the comments have a crack at me. But
don't worry, we get called parasites.
My understanding of what the current government's done is they've reduced the government workforce by 10%, but of the remaining 90%, heaps of them got a 10% pay rise. And if you're a government worker, I'm not saying that you don't provide value. I'm not saying you're not providing a good person. I know discussions about losing jobs are painful and they get that visceral feeling. But like, if you look at government spend versus 5 years ago, and you look at government employment versus 5 years ago, and you look at all of these underlying factors, the New Zealand government is too big, spending too much money. Like the taxpayer, the economy, we cannot support a government the size that we have. So really the horrible discussion that needs to happen, and hopefully Mr. Seymour can do something generally pursuant with this, is we probably need a 30% cut of government. Now, do we have politicians strong enough to have those discussions? Probably not. But are they strong enough to do another 10%? Probably.
I'd say so. Yeah.
But the data actually might even be 40.
Yeah.
Like if you look at government spend year by year, if we put a graph up in the background and the listener, the taxpayer, saw the size of government versus size of population versus size of economy over the last 5 years, and you look at how much government's expanded, it's not pleasant reading.
Yeah. And my point to that is always the same. If I'm getting the outcome, like if I'm getting the service, if our roads are the best roads in the world, if our schools are the best schools in the world, if our hospitals, there ain't no wait line, you walk straight in, okay, maybe it's working. I don't see that.
No,
I'm like, okay, why do we need an overweight government?
Completely. And like if you, there comes a point as well, and a lot of people disagree with me on this, but there comes a point where the taxpayer looks at their contribution to society and they say, well, I'm taxed on my income at 39%. I pay a 15% sales tax. I pay property taxes. I pay alcohol taxes.
Gas.
I pay all these fees and levies. And in reality, my taxation is more than 50% of my productivity. And so then you say, well, 50% of my productivity is taken from me and distributed by a government that's proven to be very, very ineffective at distribution. And at what point? And then the worst thing is that them taking 50% isn't even enough to run what they're doing, so they then need to take debt on top. So in reality, to run the government that they want to run, it's more like 70% of my productive labor. Am I comfortable being a servant of the state for 70% of my life for the benefits to the surrounding society? And it starts to get a little bit uncomfortable. And like, a lot of people might say, I'm comfortable with 20%, or I'm comfortable with a third, or I'm comfortable with 40%.
No one's saying 70.
No one. And the true cost is 70 because people don't understand the debt. And all we're doing is we're running a government in a country that we can't afford, and we are we are transferring that liability to our children, and we're transferring that liability to us in our old age, working for longer. And even with this huge cost, huge spend, as you mentioned, we're not getting outcomes. And so there needs to be a really hard discussion, and there needs to be tough politicians having sensible discussion. If the government was an individual, they would be put in jail. Like an individual that acted in that manner, an individual that spent at the level the government spends. If you take the income and you take the expenditure and you look at, they don't balance their books, right? And if an individual acted in that manner, we'd be put in jail.
You cut them off at the knees.
I think part of it though is like if you look at New Zealand debt as a percentage of GDP compared to other parts of the world, you go, not that bad. It all comes back to that point around what are we getting for it is the big thing that I look at. And there's arguments around, wealth taxes and taxing like billionaires at like 90%, all that kind of stuff. Like, the question is, like, if you're a billionaire, would you trust yourself to be philanthropic with your capital and deploy it and help people a certain way and actually for you to be able to execute it? Or would you trust the track record of the government and kind of what they've done?
And to the individuals, when they talk about taxing the rich, it never ends up taxing the rich. All they are doing is introducing tax policies that tax the middle class. The way every single tax in history is presented to the people is, you won't need to pay this. This is for the rich people. And then 3 years later, or 4 years later, or 10 years later, it's introduced to everyone because the middle class is significantly easier to tax. The second you hit a certain level of wealth and you can have multiple countries where you do business, multiple structures, you can have the best lawyers, the best accountants, you can introduce transfer pricing to lower tax environments, you can introduce the nuanced accounting laws of the global marketplace, you become very, very, very difficult to tax, right? And do you know who's easy to tax? Middle class.
PAYE.
The middle class, the salary,
Try running
the
away
house.
from PAYE.
And they've never been any poorer than like in history than they are right now, right? Well, did not necessarily expect a government rant within here, but it is very, like, I do enjoy talking about all of these sort of things. But if we bring it back to property prediction, so 10%,
I'm going
7%.
10. Yeah.
I would not be surprised if I saw 10. Absolutely. But I think as an average and the safest possible bet as a calculated gamble, I think 7 is our most likely. But 10 is definitely possible. And I think no growth, I can't see that happening. 3% growth matching inflation, I can't see that happening. I don't even think, I think it'll be better than that. I think our most likely outcome sitting here, but then that makes the median house price in New Zealand, it takes it from 900,000 to damn near $1 million. We could be $1 million. We could be the median New Zealand house price.
I think Auckland's back at $1 million. Easy.
Yeah. I think it's actually over that.
Is it already?
Again, it depends if you pick average or median, because one of them's $1 million and one's 1.1. And I can't remember what way round it was, if it was average or median. And then you read different reports and they all have different numbers.
Jimmy, what are you picking?
I agree with you. I could see 3 to 15. I know that's sitting on the fence, but I think because there's just that bit of me that goes, there's still pain. I feel like it's taken so much longer than I thought. I'm gonna go 6.
Yeah. Okay. So you're slightly more conservative. I'm 7. You're 10.
There's a bottle of wine. Going a Coleraine. The loser buys. There you go.
Awesome. Okay. So in the comment section, keen to hear, what is your prediction for the property market in 2025? Much love to Partners Life for sponsoring this episode. Please make sure to subscribe to the channel, give us a review, give us a like, and we'll catch you next time.
Cheers.